Hello and welcome to CNBC-TV18. Hyundai Motor India has announced an ambitious 5-year plan. They've outlined a 45,000 crore investment till FY2030. They've announced 26 launches, including 7 new nameplates. And most importantly, for the first time in the company's 30-year history in India, Hyundai is going to have an Indian managing director and CEO. And that's going to be Tarun Garg, who's led the company as Chief Operating Officer so far. So what's going to be the strategy for the India market going forward? Joining us now to discuss this is Jose Munoz, who is the Global CEO and President of Hyundai Motor Company. Jose Munoz, thank you very much for being with us here on CNBC TV18. Let me begin by asking you, 30 years in India, 1 year since listing, what is the ambition that Hyundai really has in India today?
Well, Parikshit, thank you very much for having me. It's a real honor to be with you here today in Mumbai. Well, definitely we're very proud. I think we are one of the first, if not the first, international company being established here in India. And I would say that our reference tells us that the Indian consumers see us as an Indian brand, which is really great. Well, today I was very proud to present our plan to 2030 for the company once we went into the largest IPO in 2024. And then not only this market is important, the main message that I've conveyed to all the stakeholders, including, of course, the shareholders in attendance, is that India is not important for the strategy of Hyundai, but it is the strategy of Hyundai itself. We will be globally as good as we are in India. That's why we've deployed so many, I would say, good news and activities that I'm happy to summarize through this interview today. I think it's been well received.
Right. So for the last 29 years, you were consistently at number 2. The market share in the last few months has fallen. Sometimes number 3, sometimes number 4. Does Hyundai want to be number 1 in India? Is that the plan?
Well, I think we are not obsessed with numbers. Numbers help us get some reference. But the thing that we are obsessed with is to provide the customer with the best ownership experience. And then one of the reasons why we may have lost some ground in terms of share is because we have decided, we made a conscious decision to focus on providing the best customer satisfaction and maintaining a high value, including the residual value of our vehicles, to our consumers. Whilst others have entered into really a price war, an incentive war, we've been very disciplined because one of our commitments to the shareholders is to maintain a very high double-digit profit margin in this market. Still, with the introduction of 26 new products, with 7 of them being brand new, with 2 of them in segments where we don't compete, like the MPV, and also in the off-road SUV domain, we are confident that not only we are going to maintain a high position, but we're going to naturally grow.
The next question that some of the investors also asked you today, why not a target higher than 15%?
Well, I think let me maybe summarize some of the things that we have announced, right? So we have announced that we're going to deliver in this market more than 860,000 total sales in the market. And then we have announced also an increase in capacity to 1.1 million, which would allow us to be, already we are, but to be by far the largest exporter of vehicles from India. So we have exported so far more than 3 million cars, and we have sold in India more than 9 million cars, right? So this is really something very important. And we want to do so by also taking advantage of the trend in the market by bringing new battery EV products, new EREV products, and especially well received has been the hybrid products. We have seen in the market a lot of positive momentum on hybrid. We have one of the best hybrids in the industry, and then with very good profitability. So we're going to bring those hybrids as well. Altogether, electrified vehicles are going to account for more than 55% of our mix by 2030, right? If you add to this the incremental capacity of our newly announced Pune plant with more than 250,000 cars of capacity and potential additional expansion in the future, this would put us in a very, very strong position in this market.
Right. I'd like to ask you about the 45,000 crore investment plan. Mm-hmm. According to the presentation that your team made, 60% of this is going to product and R&D, and 40% will go towards capacity and upgradation. What I'd like to understand from you, specifically for research and developing products in India, developing for India and for the world, how much of that money, that investment, that capex will go there?
Well, the most important element to understand in this strategy that we've gotten for India is we want to be fully localized. At the moment, 100% of the products that we sell in India are produced in India. But we want also to have the other two pillars of full localization. One, we are already there, which is the export pillar. Now, 30% of our total produced vehicles are going to be for export, and export vehicles for us bring higher profitability than the locally sold. But the third pillar, I would say, is the most important, which is the R&D localization. So to compete in the highly competitive Indian market and at the speed that is required, not only we need capacity, we need the localization of the suppliers, what we call the Tier N localization, and we need our engineers to be Indian. We need the speed, we need the imagination, we need the competitiveness that you can only get in India. I think a few companies can do that. I think we are one of those that bet for this, and it's going to be a key competitive factor for our company and our products to continue to be and even enhance the competitiveness.
Right. So when it comes to R&D, are you going to be setting up a bigger R&D center in India? Will hiring for research and development be a bigger focus area?
Yes, both answers to it, yes. So we want to have more engineers, we want to have more capabilities, so that we are faster to go to market, and we are able to not only develop greater technologies here, but also to export these technologies to other countries, namely those that are going to receive the products produced here, but also, why not, all other global markets or even our headquarters.
Right. When it comes to capacity and upgradation, you've given us a plan as to where you want to see the capacity by 2030. Now, how will these production lines cater to EVs, hybrids? How are you foreseeing that demand? And how will these production lines manage changes in the demand scenario?
Right. So one of the strengths of Hyundai Motor Group is the flexibility. We call it in Korean pali-pali, to be very fast adjusting, right? And then if you look at typically some of our plants, may produce 6, 7 products in one line. Most of our competitors will produce maybe 1, maybe 2, maximum 3, but 6 to 7 is quite a lot. So flexibility allowed our company to be the least impacted during COVID. When a lot of companies had to stop a line because they didn't have particular chips for a model, we were able to adjust the models we were producing with the chips we were receiving. So flexibility is key. As mentioned, by 2030, our plan is to have 55% electrified vehicles in India, having battery EV, EREV, and hybrid, as well as CNG, which is very, very specific to the Indian market. So that's the plan, but if we need to adjust, we will adjust. So I will set as an example our plant in Savannah, Georgia, which is the latest and greatest that we have put in operation. You know, it's a state-of-the-art plant, which we announced for 300,000 units of capacity, and then now we have already expanded to 500,000. This plant was meant to be BEV only. However, we saw the demand in the market more into the hybrid territory, so we have made extraordinary investment to be able to produce hybrids which will start coming off the line starting next year. So in addition to that, we will do also EREVs. So flexibility is key, but again, our plan is kind of 45% traditional powertrains and then 55% electrified by 2030.
Right. Now, speaking about hybrids, could you give us a sense of how many hybrid cars will Hyundai have in its portfolio by 2030?
Yeah, very clear. So the current plan is 8, which is a lot, from none to 8. This is a huge investment. We believe that the hybrid models are going to be well received in the market because you have kind of the best of two worlds. You have a great improvement in terms of the running costs, a great improvement in terms of fuel efficiency. Now we're very competitive also in cost, as we do in other markets, and you have zero range anxiety, right? So these are the benefits. We have seen, you go to the US market, which, as you know, very competitive, that typically in a given month we will grow maybe EV sales 10 to 20%, depending on the month, which is a great result given the EV chasm. And then hybrids will grow by 60 to 80%, right? We believe something similar may happen in the Indian market.
The debate between EVs and hybrids, in some geographies, we've actually seen the sale of plug-in hybrids exceeding that of electric vehicles. In the next 5 to 10 years, who do you think will be a winner between electric vehicles and hybrids?
In our plan, we believe they're going to be balanced. On the one side, the electric vehicles bring a greater performance when it comes to acceleration, handling, excitement when you drive, because they have lower center of gravity, very stable, huge acceleration. But then, as you know, they depend very much on the charging infrastructure, depend on the usage, etc. And then the hybrids have no range anxiety there. So the way we see it is that if you are, for example, in a city where you know you commute and then you have good charging infrastructure, probably a BEV is the best solution, especially if the government wants to support that technology because it's the best for the environment, right? Now, if you live more on the countryside, probably a hybrid until you get a great charging infrastructure could be the better solution. In fact, one of the elements of our plan, we have announced that we want to increase our presence in the countryside, in the rural areas of India, and to be the closest to the consumers. We have today 3,600 dealers, but we want to increase our presence there to be closer to the customer. Because ultimately, when the customer buys a product, of course, technology, design, price is very important, but service is very important too. You don't want to buy a car and then find out 2 or 3 months into the ownership, oh, I cannot repair it, it takes forever to get the parts, etc. We want to be closer to the customer and apply what we call Sonnim, which is the concept of honor guest. So every customer should feel welcome and be willing to go visit our dealers.
All right, please hold that thought. We have to take a short break, but when we return, this conversation with Hyundai Motor Company's global CEO, Jose Munoz, continues. Welcome back. You're watching CNBC-TV18 and we are in conversation with Jose Munoz, the global CEO and president of Hyundai Motor Company, and we're talking to him about Hyundai's 5-year plan for the India market. What's going to be the best price point, according to you, for electric vehicles in the India market?
We have not announced this type of information, but we'll be always competitive. We are always competitive, and then we want to bring to the customer the best. To that end, I would like to also announce, as I announced earlier this morning, that we've taken the decision to introduce for the first time ever next year our sales finance captive company, Hyundai Capital. So sometimes it's not about the price of the vehicle, it's about the financing capabilities. So by introducing APR programs, financing programs, leasing programs, we are sure we are able to provide to the consumer the best financing position. And then it's not about, hey, this price is too expensive, etc. It's, can I afford it? Can I get credit? Can I pay this on a monthly basis? And if that is the case and the conditions are competitive, I believe this is going to be a changing agent for our company.
Right. Who do you see as your biggest competitor in India right now?
Everybody. So we don't look at one competitor. We're looking always at all competitors. I think we've seen that all domestic competitors are getting better. They have a great design. They bring new products. They bring innovation. They're very competitive, which we love. We love the competition. This is what makes us better, right? We like the challenge, and the more challenge we get, the better we become, right? So everybody is a good competitor. We respect them all, but we hope we can very quickly reestablish our number 2 position. Why not even higher? Always in a disciplined, profitable, and a steady way that allows us to be always providing the returns that the shareholders are expecting.
Right. Have you set a target for your team as to by when do you want to be number 2 or at the number 1 position?
Yeah, I think it's not an obsession again. To me, what we have announced today is more about the double-digit margin, which is the constant. We keep delivering those outstanding results. We have announced also that the dividend policy is going to be between 20 to 40%, which is very good. So I'm very confident. I think already when I look at the numbers in the month, we are already back into number 2. So number 2 is not an issue. So it's there. It's every month, and then we will take it from there. But we are not going to compromise on what we call the revenue management, the quality of sales, which is what the investors expect. So the investors don't like you to be number 1 and then make no margin or losses. No. We rather be number 2, solid, provide good customer satisfaction, or number 3, and very high returns on investment. And if we can make it to maybe number 1 one day, why not? But it's not our obsession.
Okay. India has carried out GST reforms, which has helped the auto industry, as your team has also said. If there was one thing which India could do to make it a better market, which would help higher sales of high technology vehicles, high-end SUVs, what would that be? Well,
one thing we've learned over time is that the incentives to the demand of newer technologies are also helping. So from that point of view, programs like FAME or like we had in the US before the IRA, they really help the demand, especially at the beginning. And once you achieve critical mass, then you can be more profitable as an OEM. You can continue to invest and to grow, but then already the consumers know the technology and they are confident. So I think that's what I would say. Incentivizing the good technologies where the country wants to develop the growth, I think that's always a good tool.
Incentives on future technologies in cars, you mean? Because currently there are no incentives on cars.
That's what I mean. Yes.
Right. To speak about your export contribution, you're looking at a 30% export contribution from HMIL. Which are the countries where you want to improve your or increase your footprint to? Currently, you're exporting to over 80 nations.
Right. So the most important market for us these days in terms of export is Middle East and Africa. The second, it is Latin America, so Mexico and Latin America. And then you have other markets. Those export markets are really great because even if geographically markets like Latin America, you would say, wow, this is far away. Well, the product is so well received, the quality is so good, and the competitiveness is so good, that is extremely well received. I have every month the presidents of the different markets in Latin America, they come and ask me, can I get more, particularly Creta, for example, very, very popular. But Middle East, I think, is the markets which are very profitable. They're growing thanks to a lot of favorable policies. And I think they're very favorable for the Indian manufacturing.
Right. My last set of questions, sir. We've been seeing a lot of competition from Chinese players globally. They're giving the likes of Tesla and Ford a very difficult time in the Chinese market. How do you see the competition from Chinese EV makers right now, and what do you think is giving them the edge?
So I think we, as you know, are present in the Chinese market, and very recently I've taken leadership of that market. And then it's the largest market in the world, and then you have a lot of competition because there are so many brands, right? And then they've been able to develop their technology very fast, and then they've gotten a lot of government support. So if you combine those elements, they make them almost unbeatable in their domestic market. Now, is this policy sustainable, and is this something that they can sustain outside of their market? I think they're making efforts, and they're increasing dramatically their exports. So we will see how many brands are able to compete in the global market. Nowadays, it's very difficult to be successful only in one market. The level of investments are such in this industry that you need to have a huge volume and what we call the critical mass to be able to have EV, plug-in hybrid, EREV, fuel cell EV, ICE technologies, in some markets still diesel, right? And then to have the right capacity. So for us, we see the Chinese as very strong contenders. We analyze them, we want to compete with them, and we want to learn with them. But my observation is that the Indian manufacturers or ourselves, we are able to compete with them. And in fact, today, after many years of Chinese development, we continue to grow. We are the third largest OEM as a group. We recently overtook Volkswagen as the second most profitable global OEM. So I would argue that more competition has helped our group.
The rare earth magnet crisis, it has not improved. For some, it's getting worse. And China is now coming up with a large set of export controls, which will be on lithium-ion batteries and more than 10 to 15 types of rare earth. Are things going to get worse for the auto industry?
You never know. Things get constantly more and more competitive. As mentioned, for us, one of our competitive edge is the vertical integration. So not only we produce vehicles, but we also produce steel. We own our own tier 1, tier 2, sometimes tier 3 suppliers. We do our own logistics. We produce chips. We do a lot of things. So the more constraints and the more competition you see, the more challenging it is for us. But we are better equipped than others to compete in this global economy. It's not going to
put a stress on your production?
Always, but again, we have more flexibility than others. So anything that increases the competition puts more challenges on us. But this is not about the challenges for you. It's how those challenges compare to your competitors. And then other competitors may suffer more in these circumstances, right? We are more diversified. We are able to source from different places and take advantage of the power of the group. So more challenge, maybe more opportunity.
Finally, you are a PhD in nuclear engineering with experience in aerospace as well. What does that add to your automotive career? You started off working in a dealership. You became a dealer principal, from what I see. Just take us through your career trajectory and how your academic background, your background at a dealership has really shaped your leadership and your automotive career.
Well, it's very interesting for circumstances. I'm not going to tell the story, right? But one thing I've learned through my development is the importance of analyzing and the importance of data, right? So in a world where, there are different languages, different standards, etc., as long as you have very clear when you determine the strategy on what to do, how to do, and you are able to provide the direction to your teams, and then you utilize very simple tools, which everybody understands, like numbers, then you are able to drive a strategy. What I've learned through all these years also is to always challenge yourself, right? Automotive is, it used to be kind of a slow industry because the product life cycle was very low, very slow. It took years to introduce new products. And now, for example, we see the Chinese, that are bringing new products constantly. We see the Indian OEMs doing the same thing. When you work in other industries like aerospace or nuclear, you need to be extremely fast and you need to constantly apply the latest and greatest technology. So this is something that I've learned. But I say to the team, I've learned also to be very humble because there is always something that you don't know. So you constantly need to know. And then you need to be very hungry all the time. To be the best, you cannot be happy with where you are. You always have to do more, have to be better, and challenge your team. And then you need to be the hardest working in the room. It's the 4 H's. Hyundai, you have to be humble, you have to be hungry, and the hardest working. So this is what I've learned from my early days as an engineer and working in a dealer, which the dealer dimension, I never understood how important would be in my career. Because ultimately, when we buy a car, we think we're buying a car, but in many cases the consumers are buying trust, buying confidence from that dealer. And they buy to the dealer. And they buy to the dealer that product because they know if something goes wrong, they're going to come back to you and then you will fix the product.
Right.
So that's very important. So this is something that I can thank my family and my career that I can utilize every day.
So humble, hardworking, and hungry. Is that the leadership mantra you live by?
Absolutely.
All right. Thank you very much, Jose Munoz, for speaking to us here on CNBC TV18 for a very comprehensive conversation on the next 5 years of Hyundai in India.
Thank you very much.
That was Jose Munoz in conversation with CNBC TV18 on Hyundai's 5-year plan for the India market. Thank you for watching. Goodbye.